Good morning, ALC 19. Thank you for coming to the Showcase Spotlight main stage. This morning, for the next hour, we're going to change your life from a business perspective and hopefully a personal perspective. We're going to introduce you to Company Wealth Maximization. Now, what does that mean? So all of you are familiar with the story of our local entrepreneur, Bob Johnson, who started with $15,000 in an investor's loan and became a billionaire when Sony bought his company. But in the interim, Bob and Sheila both became millionaires before that sale was done. That gives you an example that anyone, almost any business, can start as a regular business and with the right kind of planning and technique can grow value into that business and grow wealth into that business. Our concept of Company Wealth Maximization basically is taking that larger stockholder wealth maximization that you see on Wall Street and bringing it down to our small businesses. Wealth maximization is your small business entity possessing value that is sustainable, long-term, and that provides for transition and legacy. Our wonderful panel here, we're going to introduce them, and we're going to start first with Ms. Frankie Hughes. Frankie, would you tell the wonderful people of the ALC audience who you are?
Good morning. Is this on? Okay. So, as Don mentioned, my name is Frankie Hughes. I'm currently responsible for Ashland Hughes Properties, which is a concern that's located in Alexandria, Virginia. My role is one of tenant acquisition, talent acquisition, and on the days when the cleaning company doesn't clean and come in, I do that too. So before that, from 1993 to 2014, I was responsible for an asset management firm. We invested money in the fixed income market for institutional clients. And before that, it's not polite to talk about those years since they were so long ago. But in any event, with that, I'd like to turn it back to Don.
Okay. I want to let you know that Frankie has had several businesses, international businesses. What we're going to talk about today, this fempreneur has done over and over again and continues to do. So the most important thing is that we have folks here who have done it. That means that you can do it. The next person I'm going to introduce is Joyce Chesley. Joyce, would you tell them about who you are?
Good morning, and thank you for having me. I'm Joyce Chesley Hayward, founder of Fusion 4, the number 4 business, and we help businesses to make more than they make, or we maximize profitability for today's small business. I have been a CPA for over 30-something years, and I am located both in Bermuda and in the U.S., so we work with businesses anywhere in the world to help them look at where they are and where they want to go. And with, as my colleagues will talk about, with profit, there's ways that you can use that profit to make sure that you maximize your financial health and your financial wealth. So as a CPA, we look forward to assisting businesses in being more than they can be and making sure that they're profitable, not just with the financial statements, but also with cash. So that's what we help businesses to do, is to make more than they make.
Amen to that. And Joyce has an extensive background in banking, so capital acquisition, which is a necessary part of what we're going to be talking about, is something that she's adept at. And then my friend, John Hale.
Yes.
Tell them who you are.
Thank you. Good morning, everybody. Excited to be here. I'm John Hale, CEO of the Cornerstone Group. We are a business advisory firm, and we really help firms focus on scaling and growing in the right way. And the right way means that you can maintain control of your company. The right way, we're going to talk about today, strategies for creating wealth. And we focus on capital, partnerships, and revenue growth. And we'll be talking about cash as well. I'm a commercial banker by training, and I spent time restructuring companies as well as a CFO, keeping them when they got into trouble, how to keep them out of trouble, and also worked for President Barack Obama at the Small Business Administration. I ran the Access to Capital Group, and I was the director of the Small Business Department. at the DOE. So I'm excited to be here.
And now, folks, how many Obama appointees do you get to meet and talk with? Very few. In addition to that, John actually ran the Minority Small Business Department in the Department of Energy.
Correct.
And he was a high level in the Small Business Association. So when it comes to government contracting, which is one of the avenues for building wealth, we've got an expert here.
Oops.
And who am I? I'm Don Maraney. I'm the principal of an accounting firm that's called the Success Zone, Inc. We're in Maryland, and our forte is doing contract chief financial officer services for large and medium-sized companies, and our job is to do what we're going to be talking about today, to build wealth inside of those companies. So welcome to all of you. We're going to have Q&A after the presentation. We've only got an hour, so we're going to allow some time for afterwards. So please, if you have a question, keep it in your mind. We'll get to it, absolutely. So what are we talking about? The business of being in business. We all know what business is about, but we believe that being in business is something that we need to learn about. And so the most important thing that we need to talk about right now is that in our company wealth maximization, we're trying to build wealth and value into our companies. And just let me digress for a second. Using that same example that we talked about with Bob Johnson, he built wealth, which was the money, but Sony saw value in that years later and gave him $2 billion for it. So you understand the difference between wealth and value? They're different concepts. Folks,
Yes.
talk to me. What do you think about the fact that wealth and value is something that small businesses should be striving to do?
No, I think that's a really great point, Don. And when we're starting our companies, we need to look at creating value. And the way we're creating value is not looking at it from our perspective, but look at it through the eyes of our customers, and also look at it through the eyes of other firms that we would want to be able to do business with, be able to partner with. Why would they see value in us and in our company? And we have to be able to take a critical look at ourselves in doing that.
And I would add to that that even small businesses have to look at themselves like they are a large business. You have to operate and think about your processes, your policies, your procedures, your infrastructure, so that you set yourselves up from day one to have profit both in your pocket as well as on your financial statements. So as a small business, you should look to generate wealth from day one. You have to have your numbers right. You have to know how to price. You have to know how to market, all the things that a big business needs to do, you need to do as a small business, or we need to do as small businesses. And that's how to make sure that your business is sustainable as well as scalable and long-term.
I think that's a particularly important point. You know, when you first start off, it's easy to confuse yourself with the business, and that's
Right.
essentially because you have control over the money. So a lot of times what you'll do is, or what I've seen, what I have done is to take the money out of the business as a salary, which of course is legitimate, but not understanding that at some point you have to decide what you're going to do with the business. That is, how you're going to transition it, and if you can create it as having value separate and distinct from yourself. And to do that, you have to have assets inside of the business. And what's the biggest asset, or the most marketable asset? And that's money.
That's money, that's cash.
So if you've taken the money out to spend, there's nothing for you to sell to somebody else. Does that make sense? Okay.
Thank you, Frankie. So, company wealth maximization, that's why we're here. And the reason we're talking about company wealth maximization is because we believe that the larger concept, stockholder wealth maximization, is normally associated with large companies, the stock market, and we tend to think that our small companies don't belong in that category. So we're changing the concept so that we, at the small business level, know that it's possible for us. Company wealth maximization.
Don?
Go.
I just want to just add a point I was thinking as you were going through that, just to follow up on what Frankie said earlier, is you need to make the distinction between yourself and the company. And oftentimes we tend to merge or blend those together, but if you're looking at other joint venture partners, or if you're looking at to raise capital from a bank, from a family member, et cetera, the first going to ask is, what are you investing in your company? And the whole point of how you manage the cash, which is really your goal when you hit your first customer, and Joyce talked about pricing it right. So if you price your service correctly, you have a profit. Now what are you going to do with that cash? And so often we want to look at ourselves, but really need the old adage of, if you take care of the company will take care of you. And in terms of value in other people's eyes, be they a bank or whoever joint venture partner, they're going to look at you and how you spend your cash as a representation of how you value your business, if that makes sense.
So let's explore that for a minute. The separation between the business owner and the business, because that's a very important point, especially if you're a sole proprietor, where in most eyes there's no difference. But then an LLC has members, corporations have stockholders, but at our level, we're all of those things because it's only one business. Let's explore that, because it's important for us to realize that there are two different entities there, and also there are two different opportunities to build wealth inside the company and for ourselves. So can we explore that?
Go ahead.
And I was going to add that with being a small business, quite often we do merge things together. And what, as a CPA, my team does in making sure that the books are in order, because quite often we take things out of the business and we don't track it. We think that, oh, well, I'll spend this, I'll spend that. We have to separate and make sure, one, that a bank or whomever we may want to go to help invest, if we're going to scale, needs to see that we're able to take a salary. The owner of the company should be able to take a salary. That should be built into your numbers. All of your operating expenses should be included, which includes paying yourself, because you're the most valuable employee in your company. If a bank or the SBA or the government contractor sees that you're not able to take a salary, you're really not keeping track of what the real value of the business is. And then the company should be able to pay all of its bills, all of its expenses, and have profit. So those two things are separate. Your personal expenses, you as the owner, should be a separate entity from your company. You are your most valuable employee, and that should be very clear as to what you're doing, and that's separate from what the business is doing. And the business should be able to show that it is able to make a profit as well as cover all of the expenses.
So the important thing to all of us is this. We own the business, and if we perceive that we're like GM on the stock market, where we've got thousands and thousands of stockholders who are separate and distinct from the operation of the business, you can visualize what we're talking about. We want you to begin to think of yourselves as the owners and think of the business as something that you have to steward. You're actually the asset manager. Frankie, in one of her businesses, because she has had many very successful businesses and built wealth in all of them, in one of her business, she was an asset manager for gigantic companies. She managed their money. What she made sure happened, though, is that she was prudent about how she managed her company's money. And that's what we're talking about. We have to make sure that we know that there's a separation between the owner and the business, and that separation allows, again, for us to build value into the business, but build wealth for both the owner and the company. So we're here today to change your mind about a bunch of things that we learned about being in business. And so we want to change your mindset about the business of being in business. And our concept is the goal of being in business is to develop your business entity into an economic asset that has value and wealth. Now think about that for a second, and we're going to talk about that. An asset is anything that you possess that has value and allows you to benefit from that value, whether it's the sale, the money, the returns, the dividends. An economic asset, we have to realize that the economy worldwide, our businesses are impacted by everything that happens. And so I'd like to explore, if you don't mind, the fact that our businesses need to be looked at, aside from being separate from us, but as a valuable asset that's our responsibility to steward.
Definitely. Yeah, and Don, I think one way we want to look at that business as an asset is how do we help that grow? And the one way we do that is we have our activities and our business plan, et cetera. But when we have our first couple clients, we start making money, how are we putting money back into the business to make sure that asset can grow even more? And the goal, of course, is that it grows beyond us. And so beyond us, meaning we want to have the challenge and problem of finding and keeping very talented people. So one area that I've seen some entrepreneurs make a mistake, and it's always a challenge for us, is who am I going to hire as the first couple of people? And kind of hiring talented people so at the end of the day, you can actually leverage yourself. So as it grows beyond you, one test is the business is making money, and you didn't have to help, you didn't have to really push that activity.
Mm-hmm.
One of the things I train with is to make sure that you look at your business like it's a seed. We quite often look at money as something to spend. Money is an investment. Money is like a seed. Like farmers look at seeds, and they don't take and eat all of the seeds. They plant them, they harvest them, they keep some. And so those are some of the keys. Is one of the things is to change our mindset as to how we look at money, how we look at our business. In order to see that business as an economic asset, we have to see that it's an investment. We have to look at knowing what to plant, how to plant, when to plant, is continue with the agricultural analogy, that we have to know what we're doing. We have to have a foundation, make sure the infrastructure is strong, make sure that we're looking at the assets, the liabilities, the knowing your numbers, knowing that you have to have enough money to cover everything. One of the things our parents, grandparents back in the day used to put money in jars for all the separate things they needed to do. Sometimes we have to do that with our businesses. It's a matter of percentages, and there's a formula that I can give you that you can use, but formulas, but we have to look at looking at our business as an economic investment, but not eating all of our seed, making sure we save some to plant some that will help us to continue on year after year after year, because I know we're going to talk about a legacy later, that we want to leave something for the next generation, and we don't want to have to do it all ourselves, so we want to know how to scale, know when to scale. And so looking at our business as a seed, changing our mindset, looking at the infrastructure, knowing our numbers, and then knowing what to do with that seed when you pull in the harvest.
Thank you, Joyce.
Putting together the numbers ends up being an extremely important part of it. And by way of example, I think the first thing that you need to do is to know how to budget. And so the question becomes, well, how do you know how to budget? Well, at some point, you have some time frame, if you're in business, that you can look back to see how you are spending, not what you plan on spending. That means you have to track it. That means you either have to have an accountant, or you have to have something as simple as Quicken or QuickBooks to keep track of it. And once you know that, you kind of understand what your salaries are, the percentage. You understand what your rent is, or mortgage. You understand what your utilities. You understand what your marketing budget is. You understand what you're expending on plant and equipment. And that becomes the basis. So then the next thing you want to know is, how much money do I need to bring in to fund all those things? And that means you need to know the percentage that you have to have left over. Well, how do you know that? You look at somebody else's balance sheet. It can be somebody, whoever is in your line of business, whoever is in your industry, whatever they are bringing to the bottom line, whether it's 5%, 10%, 20%, that kind of tells you what the standard is. So you know what your expenses are, you know what you're supposed to bring to the bottom line, that means you know what you have to generate. And that's the first thing that will start to tell you whether or not you are starting to produce something that has an economic value. And by the way, probably the only thing you can control, if you can control anything, is the top number that you bring in. And included in that, on the expense side, is what you're taking back, so that or taking out for yourself. So that's where it starts to be very clear how you're separating yourself from your business.
And I would like to add to that point is when we focus on the top line, it's really important. I think Joyce mentioned a little bit earlier, but really important to find out what is the real true cost for you to deliver your product or service, whatever it is, to the market. In the restructuring and the bankruptcy work I did on companies, that was one of the number one problems is you would go into specifically larger companies, several thousand employees, and they couldn't tell you how much it cost for them to deliver their product or service. So really know that, and then also know at what point you're willing to walk away from the table and not just sell your service just to sell a service to get your name out there. If you're not going to be profitable, if you're not going to be able to take cash out for it, you really should think long and hard about not executing that transaction. You know, I used to call it, it's hard to buy market share, right? It's expensive. You can't do it. You'll end up seeing guys, like my former role, when you were going to the bankruptcy process. But the big issue is that when you learn to look at that revenue that you're going to earn, and we talked about budgeting, really focus on your cash flow. You'd be surprised, some multi-billion-dollar companies I worked with did not know how much cash on hand they had at any point in time. So know how much cash you have and how much money you have in your pocket. So as you're doing your planning and your budgeting, because you're talking about maximizing the wealth of your company, focus on always realizing how much cash you have on hand. And when you're going to enter into a transaction or as you're negotiating price, terms, delivery, etc., always focus on that cash. When are you going to get the cash, and how much of it are you actually going to get at any point in time?
And I will add to that one of the analogies I like to use is thinking about your expenses like a toothpaste tube. How many in the room have ever been where you had just one toothpaste tube left in your house and there was not much left in the toothpaste tube? You, as I would say, squoze. You squoze and squoze and squoze and squoze that toothpaste tube to get out the last little bit that you needed to get out until you got some more toothpaste. Is that right? That's how we have to look at our spending with our businesses. Sometimes we spend just because we have it. When you have a lot of toothpaste in a toothpaste tube, you'll put as much on your toothpaste, on your brush, because you have it. When you don't have much, you use what you have. You will find necessity is the mother of invention. There's businesses that have found many ways of doing things when they did not have much money to make it work. When we have a lot of money, we just spend it. But we need to look at our expenses like the toothpaste tube and always operate as lean as possible. So there are some things we can't control because there are certain things you have to do, but how do you have to do it? Do you have to have a Cadillac or Lamborghini type of service or a Lamborghini type of pen, let's say, versus a Bic? Especially if you don't know your margins or you're trying to make sure you're as lean and as profitable as possible, and especially as you're starting out, look at squeezing the toothpaste tube. That's something that we help with companies. To maximize your profit, you have to make sure you're being as lean and as efficient as you possibly can.
Basically, what we're talking about is planning, advanced planning. Now, we all know as small businesses, when do we get time to plan? But we're going to talk about that later on because that planning requires you to start building a team around you, and working with that team is where you find time to do the planning that we're going to be talking about. So we're going to get to that. But what is financial wealth? I mean, what actually are we talking about? We define it as acquiring and accumulating assets and resources that have high asset net values. Mechanical definition. Basically, we're talking about being able to develop the cash flow that allows you to accumulate income-producing assets. So, John, what is your definition of wealth?
Thank you, Dan, for the question. My definition of wealth is when we get to the point where we have passive income from our businesses and the operations that we're doing, and that we don't actually have to deliver that good or service, or as we would refer to, I'm making money literally while I'm sleeping because someone else is generating that. Excuse me, and that it is based upon the efforts that we've developed in the past, and Joyce talked about the infrastructure and systems and processes that will enable us to scale so we can actually sustain our businesses at a certain point and they don't go up and down.
Joyce, you have a definition of wealth?
I'll ditto that. That I would say the same thing. Sustainable income and profit, such that wealth is, and really wealth can be different for different people. And what is wealthy to one person, it could be different for some others. But I like to look at wealth holistically, because you want to have financial wealth as well as physical wealth as well as emotional wealth. Because having a business and not having a family, having a business and working it all the time and not having any sleep or not able to eat, or what was it, John?
Oh, I'm sorry, and not to be able to just have any fun and enjoy yourself.
Exactly. That's not, to me, that's not total wealth. Sometimes you have to sacrifice and do certain things to get there, but you have to look at it holistically. So, but for financial wealth, it's being able to know that your business can be sustainable whether you're there or not. It takes some time sometimes to get there, but that's really wealth, is when your business can serve you and you can have, as I call it, profit freedom, where your profit is more than just the money that is on a financial statement, but it's money in the bank, that it's assets, that are things that are earning income for you while you're sleeping.
So essentially, to us, financial wealth is making your money, making your assets work for you and produce income, and to the level that you don't have to worry about income, wages, or anything else anymore. And your company can do that for you, and you can do it for yourself inside of your company.
Excuse me.
So basically, wealth maximization is revenue focused. We started a discussion about that before, so let's continue it. Because if you're not bringing in any money as a rainmaker, then there's nothing for you to even manage and plan for. So let's talk about that. Joyce, would you begin?
In order to maximize wealth, you have to have profit first, meaning that you have to have more income coming in than your expenses, the bottom line of profit. And quite often we look at that on the financial statement, because I'm an accountant by trade, but I like to look at what those numbers really mean. And you can be profitable on your financial statement but not have cash in the bank. So part of having wealth is to have cash or to have liquid assets. So not to just generate a profit on the bottom line, but you have all this debt on your financial statements that you can't pay, or employees that you can't pay when it comes time to paying employees, or IRS is breathing down your neck, or the other tax or other obligations you have. It's having liquid cash. So it's both profit or income, net income on your financial statements, but also seeing that in your bank account. But then looking at those two things simultaneously, having income and cash flow. So it's looking at those both, so that when you need to partner, as John said, he used it, but I like the acronym of CPR, when you look at bringing those things together so that you have a business that someone is interested in partnering with you, someone is interested one day in buying, your children are interested in taking on from you. That's in order to maximize your wealth. You have to have income, but you also have to have cash flow so that you can maximize that profit to generate cash.
John?
Well, sure. And a couple of the thoughts on that would be related to, as relates to revenue. As if we're starting our business, if you're sole proprietor to starting, or if you've been in business for a while, and the idea, of course, is to grow in the scale, is to look at what are the different revenue streams for your company. And how can you have multiple revenue streams for your business? And then also look at, just be honest with yourself, and we all have many different talents as it takes to starting our business and being able to manage and grow it. What do you do really well, and where do you have some challenges? And if you may have some challenges, one of the things that it may be looking at is, maybe I need to look at other people, maybe folks that can work for you, strategic partnerships, et cetera, to look at just multiple streams of revenue that you can have for your business, and different revenue strategies and different ways to be able to access the market, and how can your customers find you as well. So really having a tactical approach to that revenue growth, and you may not be the end all and be all to be able to make that happen yourself. you may have to leverage yourself and to seek some partnerships there.
Piggybacking on both what Joyce as well as John have both said. So cash flow is not just, is an extremely important part of the picture. It isn't just how much you make that year, it's how the cash flow comes in. So your expenses, by and large, are going to be pretty much spread out over the year in the same sort of monthly rate. It's your revenue that might go up and down. Frequently, if you're in a service business, if you're on a contractual basis, you do the work and then you get paid, hopefully sooner rather than later. But the point is, the top line can go up and down. And if you don't have enough of a cash cushion to maintain your expenses, then you run into another number, another issue. In other words, you can't get to the end of the year because you can't sustain your business because you can't pay the expenses as you go along.
Exactly.
So cash flow ends up being really important, and it gets back again to this whole concept of planning. Understanding how your revenue comes in and understanding how your expenses go out.
So as small business owners, we are all familiar with the profit concept. We call it profit maximization. But the reason we call it profit maximization is because it has the parts that we've been talking about. Revenue generation, revenue control, revenue collection, because revenue leads to positive cash flow. And positive cash flow is mandatory for us to begin to think about building wealth and value. So we all know about profit. We have to achieve that first. But while we're achieving that profit needs to be reflected in the bank account and that money. And as Frankie said, how you collect your money, when you collect your money, how much you keep of your money once you collect it, and what you do with it becomes the important part of profit management. And yes, it takes planning, and that's where the team that John talked about comes in, surrounding yourself with people in your industry and out of your industry who help you look at your entity and plan for it. So that's extremely important. But we all know profit. Replace profit with profit maximization in your mind, because that's what we should be thinking about. The second part of this is once we have the profit maximization down, the cash flow that we talked about, that's cash maximization. And so Joyce mentioned that when you have a net profit on your profit and loss, we need to look and see whether or not that cash is in the bank. Right. Too often, we've got a $5,000 net profit on our profit and loss and 46 cents in the bank. That's not going to work. That goes to what Frankie was saying. We have to be able to plan the flow of our revenue, the diversification John talked about. And John, would you explore the diversification again for us?
Sure. We were talking about the different revenue streams for our company. We obviously want to grow our company to create wealth. And so as we're doing that, as we're doing our strategy and our planning, and as we're growing, we need to look at how can we market our business, look at our customers, but also how can we develop different revenue streams. And so from a lot of the service customers that I deal with, some of their business, I look at their website and I ask them, what is the www? And they say World Wide Web. I said, yeah, it's not DMV, whatever your line of your business is, meaning that we should look at how can we export our goods and services overseas. How can we partner with foreign companies that want to export their product in our industry back to the United States? How can we partner with them? Meaning that we know our market, we know the country, we know the laws, we know the cultures, we know how to market in various segments of our business here. So developing different revenue streams for our company. One, we're not so reliant on any one customer. We can't always keep our same customers forever. That would be great, but at some point, they may find someone else, or they may want to cut their price, which will hurt our margins. So we always need to be looking at a diversification of our customer base. We never want to be in a case where 70-80% of our revenue is coming from just a small handful of our customers. They go out of business, they mismanage their business, they don't like us one day, ownership changes, et cetera, then we are at their mercy. That means we are our employees are, our families are, everyone that relies on us are at their mercy. So we really want to be able to diversify and have multiple revenue streams. And through a couple obvious points of that, one is with all the technology we have, there's clearly many different ways to reach our different customers. And then I always talk about and always really want to emphasize being able to export our goods and services overseas and then work with companies that want to invest in the United States.
And Frankie, you introduced in the last statement that you had about budgeting, cash management, and planning. And so that's really important because in each one of your businesses, you had those processes as integral parts of your management style. Now, is that the way you were able to accumulate cash in your businesses, by following those processes and planning?
I guess the short answer is yes. One of the, as I've been sitting here, I've been thinking about a couple of things that were helpful early on. The first thing is that I read this book called The Millionaire Next Door. It's really a pretty old book. It was probably published about 20 years ago. And so it talks about the need to, it basically talks about how any business / person can be successful just by just by recognizing that wealth accumulation is a long-term process. So I guess the personification of that is when you see, let's say, an athlete who has I don't know, is a $100 million contract.
That works.
News.
Uh-huh.
Well, there's a reason why that's noteworthy, and that is because not everybody does it. That makes it news. But it doesn't mean that you still can't be extremely comfortable if you're willing to do things over time.
Yes.
And so they talk about, and that kind of gets back to what John was saying and Joyce about the accumulation process being a longer-term proposition than a shorter-term proposition, and what it means to have wealth. Having wealth means that you don't have to work. That doesn't mean that you don't work, because if you spend,
but you don't have to.
if you spend all of your life working, you don't suddenly not work. But it just means that you're not worried about whether or not the mortgage is going to get paid. Why? Because you don't have a mortgage, because you paid it off.
Right.
So I guess I'll just say, to your point, you're right. It's a planning process.
So that brings it to an interesting thing. Rich versus wealthy. Rich in my mind is having enough money to do everything you want, but if your job changes places, your contract doesn't come through, you're sitting here with all the rest of us trying to figure out what to do. Wealthy is, no matter what happens, your assets are producing money for you. That's the difference between rich and wealthy. So we know a lot of people who are really rich, but if one thing happens that changes that income flow, that changes their entire fortune. We want you to be in charge of your financial future, and we're saying that building cash in your business is the only way you're going to reach both value and wealth inside of your business. Okay? So this is what Frankie was talking about. This slide, the business of being in business, wealth maximization is a long-term process. Profit maximization is short-term. You should be planning and striving to be profitable as soon as you possibly can. That's what your team helps you to do. Wealth maximization is long-term, and it's long-term because it's a goal of being in business, not an objective. The objectives of what are you going to be doing 6 months, 12 months, 18 months from now. The goal is to become wealthy. It's a long-term goal. Joyce, any thoughts on that?
Ditto. That in order to...
She likes ditto, folks.
You said it. That in order to make an impact long-term, It takes steps, year by year by year. But you have to plan, as Frankie was saying, you have to have a plan. Without a plan, the people perish. And so if you don't have a plan for your business, if you're not planning to be profitable and what to do with that profit, then you're not going to get there. And it's not going to be overnight. As Don said, wealth is something that is long term. Wealth and rich are different. You know, people that are wealthy, when there's an economic downturn, they're able to sustain it and sometimes even benefit from it because they know what to do with the cash that they have. They know what to do with the investments that they have. You know, it's a sale on Wall Street for them versus an economic, you know, a downturn or the stock market has crashed. No, they see opportunity because they have the wealth to be able to utilize what they have to maximize on opportunity. So in your businesses, in our businesses, it's about looking at the short term, but also the long term. Being able to look at what you're doing now with your profit and how to use that profit, as I say before, is invested as a seed. The harvest doesn't come overnight. As again, using the agricultural analogy, that when you plant something, it takes a while sometimes to see that seed come to fruition. We can't be impatient. We have to go through the process, make sure that we're looking at how to nurture that seed, how to nurture our profit, what to do with our profit, how to set up the infrastructure with our business, all the things that have been talked about in order to get to that point of long-term and sustainable wealth. Different from being just having that bottom line, being rich, but being wealthy and maximizing that wealth. It is a long-term goal.
So just as an example, one of the best vehicles for accumulating cash is an S corporation. Most people who are in S corporation don't understand how to use that corporate mechanism, that tax mechanism, to accumulate cash. So part of what you have to do is surround yourself with a team that can give you that kind of advice and guidance so that you can make sure that while you're planning to become profitable, that the wealth and cash that you're accumulating while you're generating that revenue can be used so that you can accumulate it inside of an entity that's to your benefit. And so,
excuse me, Don? Oh, Don?
Please, go.
Yes, can you explain to us, you mentioned a S corporation. Can you explain to us what that is and why one would want to enter into that type of structure for their company?
Sure, and I didn't mean to digress from the topic, but very simply, an S corporation is a special kind of corporation that you have to ask IRS to allow you to become for tax purposes. And because it's a corporation that does not pay taxes, it actually passes the net profit down to the owners. It has certain advantages that allows the owners to accumulate cash inside of that entity. And again, that's something that your advisors should be talking to you about because it's something that we definitely need to be using to our advantage. Unfortunately, because we don't surround ourselves with the team that can give us the advice like that, we don't know about it and we're missing opportunities. Absolutely. So profit maximization that we all know about is a short-term goal. We have to reach that profitability before we can even think about going further for the long-term goal. And so in terms of profitability, we've already said that profitability should equate to cash. And one of the things we try and tell our clients is don't spend all the money in your business bank account. Put 10% away, 12% away, reserve account, let it stay in the account, but we have to start accumulating cash for ourselves. What's your thought on that?
Well, go ahead.
Okay,
Ladies
sure.
first.
Ladies first.
Okay. If I could, if anyone has their cell phones, there's a sheet that I give to my clients. It's based on a book that's called Profit First. And if you have your cell phones, if you want to text the word profit to the number 202-335-4255, again, that's 202-335-4255, there's a form that is a general template with percentages that you can use to look at whatever your real revenue is, the money that if you're a government contractor, your revenue minus what you have to pay your contractors, but looking at that revenue number and then looking at what is the percentage that I should be putting aside for taxes, what's the percentage I should be putting aside for owner's pay, what's the percentage I should put away for operating expenses, and what's the percentage I should put aside for profit. Because you have to plan, as has been said, you have to plan. And there are some general templates. Frankie mentioned using industry averages, using best practices. And that's a template that if you text profit to that number, you'll get that template. And with that, I can send you 5 keys to looking at profit freedom, how you can look at profit and being free with that profit, get moving towards wealth. But the first thing that, as has been mentioned, as Don is talking about, is the short-term goal is to look at profit, to make sure you're profitable. But you have to plan to do that. You have to look at squeezing that toothpaste tube. You have to look at what the revenue is. You have to know your numbers. As John has mentioned, you have to know what your costs are so you can make sure that you're taking contracts that are profitable. I have too many clients that come to me saying, I have this great idea, I have this great business, I'm doing all this work, but I don't know why I can't pay my bills. I don't know why I'm short at the end of the month. I don't know why there's more month than money. And that's because when I go in and I look at and help them analyze what they really are doing, they've taken a contract that they're losing money on. They think that they've got this $1 million contract and, oh, this is great, but it's costing them $1,010,000 to generate that contract, to make that happen, because they haven't thought of all the overhead. They haven't thought about the travel, the transportation. They haven't thought about the insurances. They haven't thought about the taxes that they have to pay, because there are taxes. And some people will say, I don't want to pay Uncle Sam. Well, if you're making money, you're going to pay Uncle Sam. You want to make enough money that you don't mind paying Uncle Sam.
Exactly.
That's the thing that we have to remember, to structure ourselves so that we don't pay him too much. But we know that we have to incorporate all those things in our profit plan, in our spending plan, our budget. So in order to have profit, we have to make sure we know what our expenses are, because it's nothing worse, and it hurts my heart whenever I see a great business with a great idea, they're doing excellent work, but they're losing money. Every single check that comes in, more is going out than the check that's coming in. And so they look at the end of the day and they think that they've got profit, and they don't. But again, that needs to turn into cash flow. Again, if you have a business where people are going to owe you money, you need to make sure you have contracts in place, you have things in place that help you to collect that cash. I tell persons all the time, put a buffer in your contract, get money up front, because it doesn't make sense to work, and then you get no cash from it because they can't pay you, or they can't pay you right now. They may know that they can't pay you in 60 days. Well, you have to have 60 days or 90 days of cash flow in order to do that contract. So it's more than just having profit on paper. You have to have, as has been mentioned, cash in the bank. So you have to do those real things in order to have cash in the bank. And so texting profit to that number will help you. It's a cash flow tool to help you look at how to separate what's coming in and what's going out, so that you have that cash in the bank, because cash is king.
Now, Joyce just demonstrated the value of showing up. And what I mean by that is she just gave you some valuable information. So I don't have a pen up here, but I do know where Joyce is going to be at the end of this conversation. So I'm going to get that number from her, and I'm going to get that form from her.
Yeah, what I wanted to add to that was when you talked about, Don, originally having more than 46 cents in the bank. Well, how much money should I have in the bank? When we're doing our planning, we should really be looking at a forecast as well, and spend time with a couple different scenarios, I would say. What's the forecast of your business going to look like over the next 12 to 24 months? Where's your revenue going to come from? Who's it going to come from? Out of that revenue, what's your profit going to be? Joyce has talked about the timing of the cash flow coming in. So knowing how much money you need to have in the bank is also a function of what do you need to do with that money to invest it, how you need to invest it for the next 12 to 24 months, so that $5,000 you have in the bank can really turn into $10,000 or $50,000 because you've invested it in the right opportunities for your company. So as we're doing our planning and the budgeting, having a real rigorous forecast, and being, you can have a couple scenarios where, hey, I'm real aggressive. Here's what's going to happen. I have one scenario that's a little bit less than that, but you need to come up with a realistic forecast for your company for the next 12 to 24 months that's really focused on the cash flow of your business. So when the money and the profit hits the bank, you can understand how much can I afford to pay myself, or how much do I want to do, with my house, or go on a vacation, do the things in life we need and want to do, but we also know that we need to constantly invest back in our company.
So essentially, before we can even begin to think about the wealth process, we've got to master the profit maximization process and the cash management process, because cash is required in order for us to build wealth and value. And so revenue and cash flow is a necessity. Regardless of how well your business is doing, if you don't have liquidity, then you're not a going concern. And going concern is what Frankie is talking about. A business that's going to go on and on for an extended period of time and can sustain itself. That's what we're talking about. And so essentially, we want you to understand that you can build wealth inside of your company. It's your responsibility to build that wealth inside of your company. And that has to be a thought process that happens early in the business and something that you need to plan for. Do we have a commitment to start changing our mindset about that right now? That's what we're looking for. Thank you.